Hello, and welcome to Tax and Tech, a Deloitte podcast focused on helping you navigate the ever-changing tax technology landscape through insightful conversations with Deloitte technology leaders. I'm your host, Emily VanVleet, a partner in our tax management consulting practice here at Deloitte. And on today's episode, I am thrilled to be talking with Ravi Gupta, who is a partner of mine, also with our Deloitte Tax Management Consulting practice. And Ravi is going to be talking with us about Oracle and the ways that Oracle can be useful to tax professionals and tax departments. And we've teed up this topic today and this conversation with you because we are consulting more and more, right, with our clients around cloud technologies and cloud migrations. And so, many of our tax clients are asking, what is different about cloud technology? So I'm going to start by asking you, kind of broadly speaking, why is a cloud migration something that tax departments should really be kind of looking forward to?
Thank you, Emily. Yeah, so the wave of this migration to cloud creates a lot of opportunities for tax department. Most of these applications, as they move to cloud, they have to be re-implemented. It's not a simple lift and shift. And with the re-implementation comes the opportunity for tax to tax align the design of these new applications. And more organizations are now coming to a realization that tax is one of the largest consumers of data in an organization. Tax work with the least of materiality in the organization. And above all, tax does not even generate any transaction, just a consumer of data from rest of the organization. So they really have a lot of needs that can be addressed as the organizations move their applications to cloud.
Right. And so this is essentially another wave of finance transformation. Is that right?
It is a finance transformation, or you could even call it a Y2K of applications where they're moving from on-prem to cloud. And every organization we talk to are kind of considering it in one form or the other.
Right. So one client that I've been working with, for instance, they have really been sharing with me how they believe that they have automated everything they possibly can given their current data constraints, but they still have very large data constraints, right? Because they essentially missed out on the last wave of finance transformation that happened. So this cloud migration then is going to bring another opportunity for our tax clients to revisit those data needs.
That's exactly right, because now since the applications are getting re-implemented, you get another bite at that apple, so to say. So these applications still have the functionality of the on-prem application. So you still have the functionality to get the level of detail and data that you need from tax perspective. And the needs for tax granularity has only gone up over the years. And we could talk more about those kind of specific needs and why tax now, because ERPs have been implemented 20 years ago as well, and tax was not part of those historically. But why now, right?
Right.
And that's because the data needs have changed for the tax department. The tax authorities have become a lot more advanced from technology perspective. They're looking for real-time reporting. There's non-U.S. jurisdictions are a lot more aggressive about standard audit files for tax and getting data real-time from your ERP system. So there's a lot of data needs that the tax should be thinking about, because it needs to be fed directly from ERP into a consumable manner.
Okay, so that then is really the answer to that why tax now. And so with some of the new requirements coming from taxing authorities, in particular outside the U.S. so far, what that means is that tax departments cannot be left out of this wave of finance transformation.
That's right, and that's one of the questions I answer at a lot of clients today on why tax now. We have done this the same way for so many years. Why can't we continue to do this? Finance applications are not tax applications. I've been told that a few times as well. But these are, because as I said, the data that tax uses comes all from these finance applications, and that they need to be tax aligned and tax sensitized appropriately, get the right level of data for all these requirements.
Yeah, I really like that thought. Finance applications are becoming tax applications because of the way that the tax authorities are moving. Very interesting. Okay, so why don't we dive in a bit more into what's changing in the Oracle architecture? Because you work with many of our Oracle clients. Oracle is obviously a major player in the cloud ERP space. So share with our tax audience here what is happening with the Oracle platform that people should be aware of.
Oracle definitely is a major player in the cloud ERP space, and they have invested a lot in developing tax solutions as well, both on the indirect tax side and the direct tax side within their cloud platform, and which again provides a huge opportunity for tax departments. So from indirect tax perspective, they have an Oracle Cloud Tax module that works as a tax engine for transactions, all the transactions that happen in Oracle. It also has capabilities to get bolted on to third-party bolt-on tools. From direct tax perspective, Oracle now has a tax provision tool called the Tax Reporting Cloud Service that can be used to prepare global tax provision and then can be directly integrated with the Oracle platform, with the Oracle ERP and or the Oracle EPM solutions. And TRCS can do much more than just the global tax provision. So Oracle is one major ERP provider that has invested a lot more in tax application as well.
Right. It certainly sounds like they have. And just for audience members or listeners who may be familiar with the Hyperion tax provision product, the tax reporting cloud services is essentially the cloud replacement for that product. Is that right?
That's exactly right. And as I mentioned earlier, Hyperion tax provision was an on-prem solution, and my comment was these on-premise solutions have not been a lift and shift. So it's a cloud version. TRCS is a cloud version of Hyperion tax provision, but in a way there's some re-implementation. And TRCS comes packed with a lot more functionality than the Hyperion tax provision had, because it's all in cloud. Now you don't have to worry about the versions and version controls around these things, because the vendor just pushes the updates on a regular basis. So you're never going to be out of on the version. You always have the latest versions you're working on, and then the cloud integration is much more seamless with the different applications within Oracle as well. So yes, so HTP was the on-premise version. Oracle TRCS, or Tax Reporting Cloud Service, is the cloud version for preparing provision.
Okay, great. So obviously some opportunities then for our tax clients around the specific tax modules or perhaps applications that exist then within the Oracle Cloud architecture. But I know there are other opportunities as well. So how would you explain to our audience or describe for our audience what are some of the major tax opportunities in these types of cloud migrations or implementations?
One of the kind of big realizations that is coming to the organization is that tax data resides in pretty much every module of Oracle or of an ERP. When I say module, I say the general ledger module. So most of the times you would only think about general ledger module as the module that you get your trial balance and tax data. But every module of Oracle, general ledger, all the subledgers, AP, AR, fixed assets, all the other modules in Oracle, they all have data that is relevant for tax, and all have to be configured in a way that all the tax data that you need for your provision, for reporting, for compliance, audits, planning is accessible and available through them. And so most of the times in this implementation, sometimes people think tax is a separate thread in an ERP implementation, and I kind of argue it's not a separate kind of thread. It is a thread that cuts across all the processes in the organization: the record to report process, the order to cash process, the purchase to pay process, and so on. Even on the HR side, it has data that you can bring from the HCM tools from tax perspective. So tax data resides in every module. So I would break down key tax opportunities into, say, 3 categories, right? So ERP category, where we would go into, when an ERP is being implemented, we would talk about legal entities. We talk about chart of accounts, configuring tax depreciation in Oracle fixed assets. Oracle can do tax fixed assets from indirect tax perspective, sales and use tax, and global VAT. On the ERP side, there's global information reporting that needs to be addressed, and global trade management for customs and global trade. Second kind of category I would break down would be the EPM, or the Enterprise Performance Management Suite. That would be more of like the Hyperion product that were known to us before in the on-premise world. So it could be financial close consolidation systems, or planning and budgeting system, and profitability and cost management systems. These are the systems that address the gathering of tax data for provision and compliance. You can bring it all. These tools can be a huge opportunity from automation, say for cost allocation and addressing operational transfer pricing requirements. TRCS also falls in the category of EPM we just talked about, that does the tax provision. And the planning and budgeting gives all the forecasting information that's very critical for provision tools as well. So very rarely people would think, what would I get from planning and budgeting? But you do need forecast. Ideally you need forecasting by legal entity. And if you're lucky, you'd get forecast by the right level of account details as well, so that you can do your perms and stuff to compute your annual ETR for your quarterlies. The third category I would talk about would be the analytics. There's analytics tools within the Oracle platform that can be configured to collect transaction-level data from various source systems and feed them into different tax calculations. So you can do a lot of data wrangling, data blending with these analytics tools, with Oracle Cloud Analytics, Oracle BI, and these tools. And these are very, very voluminous transactions and voluminous data for, say, tax reform, for provision, compliance, operational transfer pricing. And it also has a lot of very powerful what-if scenario modeling, visualization tools, and so on. So those were kind of the three areas I would break down from tax opportunities with an Oracle implementation.
Okay, great. So ERP, EPM, which is all of the consolidation, and then planning and budgeting, and then analytics. And so when you describe the tax requirements that can exist across all of those different areas of the applications, that certainly does sound like something a tax department would want to be very closely aligned with.
That's right. There's minor tweaks sometimes, design tweaks that could give you a lot more kind of valuable information. And again, the idea is always to get data out of Oracle that is consumable. And consumable means that could be put directly into the downstream tax systems without really putting any manual manipulation through. So what we try hard is to put the requirements in Oracle, so then an export out of Oracle can go directly into a compliance system or a planning system and can facilitate those modeling and what-if scenario planning.
Great. So that's the vision for how all of this would be used, is kind of end-to-end and driving data automatically into the downstream tax calculations and reporting.
That's right.
Okay, perfect. So how about the how, I guess, Ravi? Could you describe for us a little bit how do you and your team really help tax departments find those small tweaks that could potentially make a big difference for the tax department?
The way we work, we're typically supporting them in gathering requirements in a thorough manner. We would dig into each of the tax areas that are affected, or that the tax areas that the tax departments are responsible for, and document very detailed requirements from tax perspective. Then we will work with the system implementation team and make sure those requirements are appropriately designed for in the system. So we call them the tax on tax workshops and tax blueprints. So we would have the tax on tax workshops, understand the requirements of our tax departments. We go through their provision process, compliance process, planning, audit, anything else, transfer pricing, and understand the detailed requirement. And then we convert those requirements into the design for each of these modules that I talked about. And then we pass those design considerations to each of these implementation teams or sub-teams for each of these processes. As the implementation teams are designing and configuring the system, they find conflicts, so that then we work with them on coming up with different ways to get there. There's not one single way to get all the tax requirements. Every client is different because their requirements are different, their tax positions are different, the focus areas are different. So we have to work with a little bit of constraints around the rest of the finance organization around what that design is, and then maybe overlay the tax design without really affecting or negatively impacting any other parts of the design. So that's how we would work. Very, very often we would just work with the design and let the system implementation team build it, and then we will come back and help the client with testing and go live and the hypercare and so on.
Mm-hmm. Yeah, and I think you have just described really well one of the key challenges, which is that balancing act, right? We determine the tax design and then incorporating that into the overall design without compromising any other requirements within the system. I mean, what I find is that is eminently possible, right? It takes the level of expertise and the focus and kind of staying engaged throughout that implementation cycle.
There are multiple different ways to get the tax data, and I mean I can give you several examples around, say, meals and entertainment, different ways to accomplish the different categories of meals and entertainment that we need for tax. Nobody else in the organization really cares about the breakout, the way tax needs. Same with the state apportionment data, and nobody in the organization really cares about the detail that we need for state apportionment purposes. But there are different ways to get there. It's not just one way. So we continuously work with the design and the configuration team to make sure we're accomplishing what we want to accomplish. Legal entity is just a starting point, but there's a lot more you can do.
Right. Right. And one other really key point I think that you hit on is around the fact that every tax department's requirements are different. I think that sometimes because the tax forms are all the same, right? We tend to want to oversimplify and say, well, the form is the same. We have to be able to come up with a standard set of requirements. But I know that over the years of doing this type of work, we continue to find that where the data is coming from and the individual data elements that have to be fed into a client's individual calculations, there does continue to be a lot of diversity around all of that.
That's correct. So even though we wouldn't always start with a blank sheet of paper, so we do understand the requirements, at least a standard set of requirements, because the tax form is different. But beyond that, it's very different on how the client computes every line, of the tax return. I haven't seen two clients computing the tax return the same way. How do they get to what accounts, what their deal structures are, what their subledger structures are, and how do they get to populating each line of the tax return is very different for every client.
Well, one other, question that I find is valuable for clients that we're speaking with has to do helping them anticipate problems, right? And so I wanted to ask you, what do you see companies or tax departments overlooking frequently when they're embarking on an Oracle Cloud implementation, or what sorts of mistakes have you seen made that you could share here and help some of our listeners avoid some of those same mistakes?
It's not as much of the mistakes that tax departments do. I think it's more about they don't know what they don't know. I think that's what I see most importantly, because historically tax departments have not been very close to the financial systems, because they've been used to putting a trial balance together 6 to 18 months after the transaction has occurred. Right, so they were never part of when the transaction was recorded. Things have changed now. As I mentioned before, tax authorities have become more sophisticated, and there's need for all kinds of different real-time reporting requirements. Beyond that, most of the clients I go to have a very basic need of, I need a legal entity trial balance. I mean, I feel that's a very, very basic need that's foundational to any new financial system. But beyond that, there's a lot more that you can do and you should be looking for. And some of the reasons, again, why this is all coming up now and the need, there's significant deficiencies and material weaknesses. Tax is one of the biggest reasons for those, right? And why is that? That majority of them is around data and process and all the spreadsheets that occur in the tax department and how the data moves manually. The tax departments don't know how an ERP can help from that perspective. Tax reform, all the detailed data that is needed for tax reform, the data doesn't need to be kind of pulled together at the end. It can be contemporaneously collected if it is configured right. Again, SAFTI, Brexit, all the cloud subsystems that are coming, the purchasing system, all these have to be automated, and they all can be tax aligned as well. There are things that you should be thinking about in order to, as these other implementations are happening, intercompany, BEPS, OECD, all the areas can be kind of supported with an Oracle Cloud implementation.
Okay. Yeah, great. And I also like that you're emphasizing the potential for tax to have more contemporaneous visibility, right? Because if we think about the trend of real-time reporting, that's essentially what real-time reporting is going to require. And it is going to be a really big mindset shift for many corporate tax departments.
I know, and so we in Deloitte do a lot of CFO labs, and one of the biggest things that comes from the feedback that we get from CFOs is tax is one of the slowest in coming up with the answers whenever they're asked to model a scenario, whenever they're asked to do a small test on some planning idea. It takes them 3 weeks to come back with the answer. There is no back of the paper, back of the envelope calculation. And the reason for that is, one, they don't have any contemporaneous data available, so they have to pull it all together. And then all the planning that they have to do, they still have to apply the materiality. They still have to apply all the rules. So all the systems are not talking to each other in a more integrated manner. So they have to do this all manually. So with these things, as I said, with these what-if analysis and scenario and modeling tools, you have data available on your fingertips at all times, and not just real-time actual data. You have forecast data available too to do some modeling based on that.
Yeah, so I think you've just perfectly answered the question of so what, right? What you've just said is the reason why all of this is so meaningful for our tax clients, that ability to set yourself up for that future where you do have access to the data that you need at your fingertips and can get it contemporaneously to more frequently and more quickly analyze things that are changing in the business.
And at the end of the day, it is a very, very easy business case to get tax involved, because once you have real-time data, once you have clean, consumable data, you're saving a lot of time in your tax department in manipulating, validating the data, and putting those hours in value-added activities, in analyzing data, and looking at tax planning, in executing on the tax planning that you always wanted to execute upon, but you didn't have either the time or the data to do that. So I've done this several times with the clients, where we would go review where do the clients spend time, where does the tax department spend time. And invariably 60 to 70, even 80% of the time is spent just managing data, in taking the data from the systems and making it consumable. And that is a big kind of loss of kind of resource that you have in the tax department, and not being able to put them in a value-added active area. So that's where I've seen a lot of uplift once you have this right. There's talent impact as well. People have better data, they're doing more value-added activities, and so on.
Right, yeah, and those stats that you've just referenced, around 60, 70, or even 80% of a tax department's time being spent on data manipulation, those are very consistent also in many of the tax transformation labs that we do with companies. So I do think that's a great illustration of the potential savings in terms of efficiencies, and then the exponential value of what tax professionals can then do with that time.
That is correct, yes.
Okay, excellent. Well then, Ravi, maybe I'll ask one final question, which is going to be along the lines of, okay, so what can our clients be doing in this area? So for a tax department or a tax professional that has been listening to this today and they really want to start jumping on some of these opportunities, what are some of the suggestions you would give around what they can do next to get ready or be ready?
First thing I would recommend they do is get themselves aligned with their IT departments and understand the cloud migration roadmap for their organization. Every Oracle implementation is going to move to cloud or a next level of kind of platform. Oracle's only selling cloud ERP going forward, and they're encouraging the clients to have a transition to cloud roadmap. Every on-prem Oracle eventually is going to be moving to cloud. So it may not be immediately happening in a year or 2 or 3 in your organization, but it is gonna happen. Important to get hold of the cloud migration roadmap and be in front of that. First, you have the roadmap. The second thing is educate yourself with the opportunities, tax opportunities that we talked about. The opportunities with ERP, opportunities with the EPM, opportunities with analytics, because the roadmap might have all these applications getting staged. So you want to be part of that and moving hand in hand with your IT and finance IT group, as opposed to coming back at the end. Because coming back at the end, again, sometimes you lose the design and the foundational things that you should have done early on. There's things you can do at the end, but always better if it's addressed before. So my recommendation is get the IT roadmap, educate yourself on the opportunities, and even better, be ready with your requirements. Because when that happens, you're ready with your requirements, and so you're not kind of scrambling to get to the table when you're invited for an ERP meeting when that happens.
Okay, so understand the cloud migration roadmap first, educate yourself on the tax opportunities, which took you back into the thought of ERP, EPM, and analytics. And once you understand that, that's going to tell you how you can best align with that roadmap, right? And then ultimately being ready with your requirements. So knowing what you need when you get that chance to really align on some of the execution around that roadmap.
That's correct.
Okay, excellent. Well, Ravi, thank you very much for speaking with us today and helping provide some clarity around Oracle opportunities for tax. And a very big thank you as well to everyone listening in today. And finally, I would encourage you to subscribe to our Tax and Tech podcast series wherever you are listening in today so that you don't miss any of our episodes. We have episodes coming up around cloud ERP systems, tax technology updates related to U.S. tax reform, and many other timely topics connected to tax technology. So a big thank you to everyone listening in. I hope you will join us again as we continue to chart the tax department's digital future on another episode of Tax and Tech. Thanks very much.